Alright guys, so for this one, pull it up onto the screen here. Found a little mean reversion strategy that uses candlestick pattern, some reversal candles, like some bottoming hammer type wicks. When it occurs below the VWAP, we look for a long back to the VWAP. So we're going to try this out on multiple time frames and see how it does. Let's go ahead and go to the builder, new strategy. Just name it VWAP MR for mean reversion. So first, let's classify a hammer. Say price low is less than the low one bar ago. Let's do price high is less than the high from 1 bar ago. Price close is greater the low 1 bar ago, and price open is greater than the low of 1 bar ago. So there's our hammer, and the close needs to be less than the VWAP. Current day VWAP, and we'll leave it on the full session for now. Yes, the full trading session. We'll apply it on the chart. Session VWAP, so price is less than the VWAP. So we got a hammer. Price is less than the VWAP. Going to enter long. Now, whenever we are long, current market position equals long. Sets our target price. So double. Set target price as the current day VWAP, session VWAP. Target price equals VWAP. And then exit long position. It should be a limit order. Exit long position by a limit order. Target price. And that should give us a good starting point. Let's go ahead and compile this. This is the VWAP MR. Let's choose the indexes. Start off on the 4-hour chart. Past 2 years, include commission. And let's make sure it's operating correctly. Let's do the NQ. So pretty awkward here on the 4-hour chart. There's not very many bars on the 4-hour. Let's go down to the 120. So here's an example of basically the condition we wrote. The low is less than previous low, open and close, greater than the previous low, and the high is less than the high, so we entered long and exited there at the VWAP. Obviously these time frames are a little bit too high. Here's another example here. We got the lower hammer, we entered long to the next bar, and then we exited at the VWAP. Yeah, I'm gonna say probably lower time frames for sure. Looks like there might be an issue with the exit condition, but we'll go back to it once we get on some lower time frames to make sure. Let's see. So here's a hammer. Pretty awkward right there. Let's see. Yeah, we just need some lower time frames. So let's jump down to the 5 minute. So I cannot see if it is exiting at the VWAP. I mean, it looks to me, yeah, it is. It's definitely exiting at the VWAP. Looks like it's operating correctly. Here's a long. I mean, the combined win rate's pretty high, 77%. Here's an example of where it does pretty well. So right off the bat, I mean, initially, it doesn't have a capped stop loss. So we can look at like the net P&L per trade. See how the P&L is a lot bigger, with the P&Ls to the downside are a lot larger than the P&Ls to the upside. So we can give it a pretty simple stop loss. Let's say we're long, and let's use the previous low. So minimum 10 period low is less than the 10 period low, one embargo. Exit long. Let's go ahead and compile. I want to try to see this, all these big red P&Ls kind of get smaller. Whew. Made it a lot smaller, but also made it to where it hits the stop loss just all the freaking time now. So our win rate dropped down to 44%. check out the trades. So you can see in scenarios like this, where we enter and price just falls back down. Enter, price falls back down. So apparently our trigger might be a little too sensitive. Look at the hour of day analysis. I think first do a traditional trigger for medium version, and that's just like an RSI cross above. Well, actually, we do something a little better. We do like a double smoothed momentum. So what does it say? The DSM crosses above the 20. Cross above the 20. Closes beneath the high. So it did give us way better results on the 5-minute, but still not profitable. I didn't plot it on the chart. Let's plot that DSM. So here is the DSM. Here's an example, crossed above the oversold level, back up to the VWAP. Yeah, it's like an RSI basically. So here's a weird idea. What if we take off our exit condition and consider adding, so let's do market position equals flat for that. And let's duplicate. And for this one, say that position quantity, current position size equals 1. So if we cross above the 20 again, and we're already long, we'll add to our position. This is more so doubling down on a loser. Let's see how that works out. Let's make sure it's doing it right. Entries per direction, we'll do 2. Yeah, so here kind of shows an example of what I was talking about. Entered long here, but we never exited. Entered long again here, and then exited at the VWAP. Here is another example. The VWAP changes colors. It's blue, it's red and blue. Not sure what you're referring to. Everything I've seen so far, it's been correct. Let's go ahead and try out some different time frames. Kind of like the adding principle. Let's try out the 10 minutes, 15. Probably not going to get anywhere with the higher time frames. No, we'll try some of the lower time frames now. 4 minute is worse. 3 minutes even worse. And generally, the lower you go, if it's already getting worse as you get lower, then it's not gonna get better. Yeah, 1 minute gives the worst results. So another potential trigger is using the actual VWAP deviations. So for our trigger, let's remove the DSM. And let's say price close crosses below, or actually let's do cross above the lower band 2. Well, since our, if our targets were like set in stone, like if we were going for like 20 ticks and like a target of 20 ticks and a stop loss of 20 ticks, like a 1-to-1 ratio, then that win rate would be a lot more impressive. But all that's happening here is we're getting a bunch of tiny winners and just a bunch of massive losses. So it's not really doing much for us. Let's see if this trigger helps any. Cross above the lower deviation. Right off the bat, I see an issue because we can get entries at the start of the day. Let's look at time of day. Yeah, but you're forgetting the only reason why our win rate's that high is because we have an open-ended stop loss. The moment we try to actually give it a tight stop, win rate's going to plummet down to 40% or less. So the win rate's kind of giving you the wrong idea of what's actually going on. Let me see. Let me first add a little time filter. Let's say, we only can trade this, market hours. Time series is greater than I'm going to trade this only during regular trading hours. Let's see what that does to it. Slightly better. Choose the other VWAP band, so price closes. Let's do cross below. Lower band 1. Let's go back to only one entry. Okay, I got an idea. Let's say for the exit, let's just say price close crosses above session VWAP. Exit long 1, and then close cross below the VWAP. Current position size equals 1. Current market position equals long. So we're just adding some fat tail potential here. So we enter long, exit one contract when we cross above the VWAP, exit the rest when we cross back below it. So this is EMD. So it should let us, well, it probably won't, ironically enough. So it gets out right there. Let's make it a little more aggressive. Let's do the lower band beneath it. How is it still getting out right there? And that shit makes no sense at all. How it is closing this extra contract. Let me see. Cross above, that's why. Cross current position size equals 2. That was the boo-boo. Let's change this back to lower band 1. Okay, now it is holding on to that winner. So it is operating correctly. You can see it's able to capture those big green days. But our stop loss still isn't capped, causing this to happen. So right now our entry is whenever we cross below the lower band. First, let's change it back to cross above. And then our stop could potentially be whenever we cross below it. So changing it to cross above. Did improve our results some. Let me see. Using the lower band. So entry when we cross above the lower band, and our exit looks like it's going to be when we cross beneath the lower band. So we're going to say we're long, and we cross below. Let's make it current position size. Yeah, I'll check that out on the chart in a second. Cross below the lower band, remember long, exit entire position. Let's see, I'm not sure where that one was. Need to add a condition for that. Whenever we go long, we need to make sure that we're actually below the VWAP, so price close is less than the session VWAP. Okay, we're gonna on a few more time frames. Looks like the 10 minutes is profitable. 15 minutes. How is a 20-minute even doing that good? Here we closed above, entered long, closed above again. It's pretty interesting. Go ahead and test it on the whole basket. And we'll call it there. Let me make sure the per direction isn't messing up. Okay. Let's do the whole basket. Oof. Pretty nasty on the whole basket. Let's do these 30 minutes. It was like 64,000 gross. Yeah, mean reversion strategies are a bitch. They're not easy to make. And Google apparently has nothing to offer. Good grief, I mean, just no bueno. No, it's probably more along the lines of just posting stuff to make content and get comments and everything else. If they really had a mean reversion strategy, that was the sauce, they wouldn't be posting it on some public ass forum. But anyways, cool. You know, we'll definitely see in the future we can find some more strategies online, and test them out, and see what's going on. But cool, man. Thanks for joining, and see what we can get into tomorrow.